Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be looking at what can I purchase for under $10. Say only at $10, and that's a pretty good starting point for many investors. They don't have very much. Maybe you're a teenager out there, you're turning, you turned 18, 19, you have $10 a month that you can invest. What can we invest in with $10? Now, you can now my advice is to do a screening process and kind of get a good look at the market as far as what can you get for $10. So let's just start there. So I'm going to head over to finviz.com. This is where I do all my screenings. Now this isn't whatever you get from the screening process is not what you're going to be buying. You're going to be screening it even further. This is just going to give you a nice, it's going to give you a list. You're going to look at its chart. You're then going to look it up as far as financial data, statistics, forward growth, what kind of stuff they have upcoming in the future. Will it be around in 5-10 years? You're going to do a further investigation on that specific stock. Now, if you're a short-term buyer, and day trader, swing trader, etc., it wouldn't be bad for just a few months just to kind of dip your toes in. And let's go ahead and begin screening our stocks. So of course our price is going to be under $10. Now you can choose to have a dividend. I'm going to choose over 4%. That knocked down our stocks to 160. I'm going to go ahead and switch it to US. Now we're at 117. I'm going to go PE ratio under 25. EPS, for my earnings per share, I'm going to go ahead and go positive. My long-term debt, I'm going to go under 1. Payout ratio under 70%. I'm going to have sales growth for the past 5 years. I'm going to have some positive sales growth. Now we're down to 6 stocks. Now, we could continue knocking those 6 stocks out, but I think anything 5 or 6 is a good time to start screening. And already we can see that we can afford 5 of these. We can't afford Glad. Glad's a pretty good closed end. It's a fund, it's a financial. So you can see that there's a technology, a service, and a couple financials in here that we can actually buy for underneath $10. So I'm going to go ahead and switch it over to charts. And let's take a look what is on an upwards trend. Right now, PIR, Pier 1 Imports, is on a downward with 2 supports. Both supports don't look very good at all. Evolving Systems, actually looks really nice for $4.95. I could actually buy 2 shares of that stock. So I'm going to go ahead and keep that one in mind. We have TICC Capital Corp. It's on a downwards trend. It only has 1 support, and it's kind of going downwards as long as it's trend line. FS Investment Corporation, again, support's down and trend line is down. Gain is on an upwards trend, and so is the support. Looks like the support is going up as well. So is Glad. Now we can't afford Glad, but we can afford Gain, and we can afford Evil. So I'm going to be taking a look here. We can see, next thing I would do from investigating the 2 charts, that both of these stocks look like they have some good growth and potential growth for the future. So I would go and just do a quick 5-year lookup. So Evil stock and let's take a look at their 5-year. Now their 5-year, it looks like it's actually gone down 17%. It doesn't give me what their company's about, but I can do like about. They have like a summary here for Evolving Systems, and I could take a look at that to get some further information. The other stock here was, which one is it here? Gain. So I could look up Gain stock. And this one had some upwards growth of 24%. So about 5% per year, which isn't bad. It's been a pretty good market for 25%. That's about 5% back every year. The average for the S&P 500 is 7%, but this one offers, it's actually an 8% dividend. So pretty good dividend. If we wanted to, we could go into dividend.com and type in the ticker symbol to get additional information as far as how long it's been paying dividend growth. So it does have a very high payout ratio. I had put in 70% or under. I believe under 70%. I'm not sure why this one pops up under 70, but it is a, dang it, it is a diversified investment, so I could see that kind of being that way. PE ratio is pretty low. Again, this is just a screening process, so of the two, if I had to make a choice between, what was the other one here? I can't think of. Evil and Gain. I would probably go with Gain. It's a safer investment. Over 5 years, there is growth. Even if it dropped down, it has been paying dividends for quite a while. We can see that on their dividend payout history. They've been paying dividends since prior to 2016. They've been around. They did decrease their dividend in 2009, it looks like, after that last recession, but they've continued to pay dividends after that. So they did have a special dividend payout too, so they do pay out 0.6 cents for every share, but of course they're $9.45. So you buy one share, you get paid back 6 cents. That's a yield of 8.13%. So not too bad, not too great. But that is it for the screening process. I want to thank everyone for watching up until this point. If you liked the video, hit that like button, and please remember to subscribe for future financial videos. If you have any questions, go ahead and leave them in the comments. I will always reply. Thanks for tuning in, and I will see you next time. Bye.